My name is Mark Kazanovich. I'm from Phoenix, Arizona, and I'm Director of Operations at Core Accounting Solutions, a tech-forward bookkeeping and management accounting firm specializing in working with attorneys and law firms to help them run more effective, compliant, and profitable businesses. I joined Core in 2014, bringing a background in tech and operations to our team. Since then, we've gone all in on supporting small, modern law firms, embracing cloud technologies, and the various tools available to help attorneys succeed. I'm the father of two very energetic boys, 5 and 2, so I'm happy to be here for a few days. I love to play music and spend time outdoors, and my wife Brooke and I will be celebrating our 10-year wedding anniversary in a few months. While you won't be leaving the session with a master's in accounting, my hope is that by the end of our time together, you'll have a few things that you can bring back with you to your firms. I hope that you'll be thinking about, what little tidbits, what are things that you can take back and start applying right away. In general, you should have an idea of how accounting for law firms is different than for other types of businesses, as well as what's in common, which tasks are handled in Clio, as well as which are handled in QBO, and finally, you should have some best practices that you can apply. As we go through today's presentation, there are a few things I want you to keep in the back of your mind that will make all the difference when it comes to streamlining your accounting. Have accurate processes, have a process and make sure that, keep accurate records, have a process and make sure that everyone on your team knows what that process is, and finally, be consistent in sticking to the process. Quick note, for the purposes of this presentation, we're going to assume that you have a basic familiarity with Clio and you understand how to create clients and matters. If you need more guidance on either of these things, consider attending the Getting Started with Clio session today at 3 p.m. immediately after this session, which will be available in person and virtually. Additionally, those of you in Nashville that are looking for some more one-on-one support should stop by the Success Center in Ryman C2 Exhibit Hall. When many people think accounting, they think taxes on one end of the spectrum, and they think bookkeeping on the other end of the spectrum. But there's this whole middle portion that's often neglected, and that's management accounting. Having good accounting data can help you with everything from making informed business decisions to getting competitive rates on lines of credit. Additionally, these are things that all businesses should be doing. You need to remember, if you own your own firm, you're not just an attorney, you're a business owner as well. And it's important that you have the data that all business owners are looking for to make educated business decisions. There are a few things that make legal accounting unique. One, depending on how your firm is structured, you can have all sorts of different complex revenue share, fee allocation agreements, and these need to be calculated. I would encourage you to consider streamlining these so that you're not paying someone to create macros in Excel just to figure out how you should be compensated. Additionally, cash flow and forecasting can be really difficult for an attorney. If you're an attorney that bills on contingency, then you could be laying out a lot of money before you ever see a cent. And even then, it's not guaranteed, but you still have overhead, you still have case expenses, you still have a staff that you need to pay for, whether or not you cash out at the end of that case. When you are billing on flat rate, it's a little bit easier because you can kind of predict, you know when the work's gonna happen, but even then, you don't know when the new clients are gonna come in and when you're gonna have, what sort of flow of business you'll have. It may be that you're in an industry that's a bit more seasonal. And then, if you're billing from trust, that's actually one of the easier ways to manage cash flow because you can be sending trust requests on an ongoing basis. And speaking of the features that Jack rolled out this morning, that's gonna be even easier. And when you have the funds in trust, you're able to do the work and then you'll be able to collect right away. However, as all of you know, the hallmark of legal accounting is the requirement to keep a trust account along with accurate records. Trust accounting is something that most other industries don't have to deal with, but for lawyers, it is the difference between having a job and being sanctioned or disbarred altogether. All it takes is one overdraft of your IOLTA fund, one client complaint to the bar from a client that didn't get their trust accounting as quickly as they wanted to trigger an audit. And I hope that everyone in this room and virtually would pass an audit if audited today. We know, unfortunately, that's not always the case. When we talk about three-way reconciliation, there are a few things that we're referring to. And I want to break it down in sort of a straightforward way. And again, as we talk about this, I want to emphasize that utilizing the right tools, having a good system, and being consistent is the key to staying compliant. When your processes are set, you can rely on the process rather than relying on yourself or remembering or trying to figure it out at the end or finagle it to work. When the Real Housewife of Orange County, Erica Jane's husband, Tom Girardi, was indicted for trust account fraud, I was pretty excited because I could finally explain to my wife what we do for work. And it's the egregious abuse of trust funds that get media attention. The reality is that the majority of these bar audits are performed on attorneys who didn't maliciously mismanage trust funds in bad faith, but rather they inadvertently got out of compliance. One of the top reasons attorneys are sanctioned, Arizona, it's been consistently the number 1 or 2 reason attorneys are sanctioned, is this mismanagement of client trust accounts. Additionally, another thing to note is that not all states actually have formal 3-way reconciliation reporting requirements. They still require you to be in compliance with your trust accounts, but they don't have you create reports to prove it. We recommend that even if you live in a state that doesn't require it, you're still doing the 3-way reconciliation so that if, God forbid, you're audited, you're able to present the bar and the auditor with accurate records right away. The other thing is, when you're doing your 3-way reconciliation on a monthly basis, which is how frequently you should be doing it, it becomes a lot easier to catch discrepancies and identify errors and resolve those right away. The last thing before we talk about the actual mechanics of the parts of the 3-way reconciliation is to remember that Clio is what you want to happen and QuickBooks is what actually happened. Okay, and that's really as simple as it gets. Clio is what you want to happen and QuickBooks is what actually happened. The 2 parts of the reconciliation process that every business owner has to do are the top corner of the triangle and the bottom left. The top is the trust account bank statement balance. This is what you get from your bank, and for better or for worse, this is the Bible. That's what actually happened. That's the money that actually moved. On the bottom left, where it says QBO Trust Register Balance, what this refers to is the actual accounting of that trust account in your accounting software, okay? So it needs to match 1-to-1. What's unique for attorneys is this additional bottom right corner of the triangle. And for attorneys that use Clio, which I'll get into in a minute why we feel it's definitely worth it to do that, it's really a 4-way reconciliation. Because on the QuickBooks side, you need to make sure that the client trust liabilities, which is the sort of theoretical liability that you record on your books, matches the Clio Trust Listing Report balance, which is the specific total of all of your client matters and client trust funds. While it's important to run a law firm with while it's possible to run a law firm with only a general accounting software such as QuickBooks, it's really not ideal, and it doesn't have the operational tools built in that an industry-leading tool like Clio does. There is an additional expense for Clio, and we wholeheartedly believe that it's worth the money because it helps you streamline process. And, I see someone taking photos. The presentation, all the slides will be available after the presentation through your ClioCon app. And there's also a handout for those of you that are in person in front of you and those of you joining us virtually as well in the app. QuickBooks, the way we explain to our customers, the QuickBooks is the macro level data. QuickBooks is where you have your overall revenue, your overall expenses, your overall client trust liability balance, but it doesn't have all the day-to-day specifics. It doesn't have trust balances by client. It doesn't have your different engagements and interactions with the client. It doesn't have scheduling. It doesn't have your notes. And it doesn't necessarily have case-related expenses tied to a client, which we'll talk about in a little bit as well. Clio is the micro level data. So again, QuickBooks is macro level, Clio is micro level. We explain to people when they come in and they think they need everything in both places, that if you have systems set up appropriately, you don't need to be able to pull all reports from all platforms. You pull the Clio relevant reports from Clio and the QuickBooks relevant reports from QuickBooks. QuickBooks Online is a very robust and full-featured accounting tool. And there are a couple foundational things to understand to help you get the most value from your accounting. The chart of accounts and the bank feed. These, again, this is the QuickBooks has so much more available, but these are really the 2 things that impact you on a day-to-day basis. The general ledger, chart of accounts as QuickBooks calls it, is the accounts that end up populating your various financial reports. I love this quote by Einstein, that allegedly, that everything should be made as simple as possible, but not simpler. The idea is that when you or someone that understands financial reports looks at your financial statements, they should be able to see a story. They should be able to have an idea of what's going on and be able to have thoughts and opinions about your business based on the financials. If it's too simple, you can't really get the insight that you need. And if it's too complex, it gets lost, okay? You can't get the data you're looking for. A good example of this that you could think about, let's say you're doing marketing. Let's say you don't really have a lot of marketing expense. You might decide, you know what, I spend so little on marketing, I'm just gonna have one advertising and marketing category. You might decide down the road that you start investing in marketing. You wanna be able to track ROI and these various spend, and so you have sub-accounts that you add of your advertising and marketing, networking, social media marketing, paid advertisements, event sponsorships. And what you'll see is that as your business changes and evolves, the chart of accounts does as well. It's a living, breathing thing, and it's never stuck in stone. And the good thing is that it can all be changed. And the accountants you work with have additional tools to make it even easier to bulk reclassify these transactions if you decide to change down the road. QuickBooks' secret sauce, and really what differentiated them when they launched into this day, is that they have this direct integration with your bank. QuickBooks calls it the bank feed, and the way to think about it is it's really a clearinghouse for your transactions. It's where the transactions live until you decide if and where in your accounting they hit, and it's where you set the categories. And you have, as you see in the photo, you have different accounts. Each of your bank accounts is linked to this bank feed page. When it comes to keeping accurate records in QuickBooks, it's critical to understand how to properly record the different types of transactions, specifically money in and money out of IOLTA, as well as payments made from IOLTA to trust. For the purposes of legal accounting, you need to think about trust transactions and non-trust transactions. Non-trust account transactions are transactions that every business has: overhead, revenue, payroll, case-related expenses, going out to eat, buying a new computer, advertising and marketing, paying for your rent. These are things that are typically into your operating, or they're always into your operating account or in your credit card, but they're non-trust transactions. Trust account transactions are money that goes into trust and money that goes out of trust. The first big thing I want to highlight, and this is also on the sheet because it's really, really important. Money that goes into trust should only ever increase client trust liability account. Money out of trust should only ever decrement the client trust liability account. That's it. There's one exception, which is the interest that your bank pays on IOLTA and that transfer out. Basically, every QuickBooks account in their template has an interest income and an interest expense account. If you continue using those, just make sure to put the interest earned in that account to the same account so that it zeroes out. We have seen that some banks pay the interest on the last day of the month and then transfer it to the state on the first day of the month. So for this reason, we set up for our customers an additional account called IOLTA interest, and it always balances to zero, but this accounts for those situations where it crosses over a month, so it shows up on your reporting. The other big thing is payments from trust to operating. QuickBooks, what they like to do is push you to use the transfer functionality. And there's a difference. You can either add as an expense or you can transfer. It has this logic built in that when it sees a certain amount come out of one account and into another, it prompts you to make it a transfer. This is something you should avoid, and we can get into it more in the hallway if you'd like. But the way you record income is instead of making a transfer from IOLTA, because that doesn't decrement the client trust liability, when money comes out of IOLTA, you should reduce that client trust liability by mapping it to client trust liability. And then on the operating side, you record it as income. So even though it comes out of your own account and into your other account, it's recorded as if it's being paid from the client, and it reduces the client trust liability on the IOLTA side. On the Clio side, while we won't be getting into bill creation, again, there's sessions after that you can attend if you'd like more help with that. It's really important to remember that the bills are only as good as the activities that you include on them. This is the other big takeaway. If you get in the habit of recording your activities as soon as you go, rather than at the end of the month or later, including expenses, that is the best way to guarantee that you will collect on as much money as possible. I'd be curious to talk with Josh about the legal trends report, and I don't know how exactly they would measure this, if they have a way to track work that is done but never logged. And we see it so often. And think about it. Try to think back to a phone call you made a month ago. I don't think you do a very good job of accurately putting that into your Clio. Clio has some really great tools built in, and I was really excited about all the app enhancements that Jack announced. It's going to be really make it much easier to do a lot of these things on the go. But there's time, that's one kind of activity. And this includes billable and non-billable, as well as the flat fee. And for those of you that don't bill flat fee frequently, you can actually mix and match. The way you do that, and it's a little bit misleading because it's called a time entry in Clio, but it's in this activity category. You're able to create an activity type that's flat fee. There's also case-related expenses. This goes hand in hand with entering your expenses as soon as you incur them. We actually don't enable hard cost importer, which we'll talk about towards the end of this presentation. But entering case-related expenses is the other lowest hanging fruit for making sure that you're recouping as much money as you can and that you are passing on these expenses to clients instead of letting it eat into your revenue. The other thing that's important to think about is the way you receive payments in Clio. In our experience, Clio payments being incorrectly recorded is the #1 cause of accounting confusion and inaccuracy. This also makes it onto my quick hits of best practices. There are certain things that are really important to remember when it comes to this. A, every operating account deposit should have a corresponding invoice in Clio. We've seen time and time again, most firms are good about entering the invoices in Clio, creating the bills when they have ongoing engagements, when there's work they're doing for a client, but they sometimes forget to put it in for a consultation or a quick flat fee engagement or even a settlement, which is really bad. And on the QuickBooks side, all income-related deposits into your operating account should have a corresponding invoice payment that they can match to. If you can't find a corresponding invoice payment in QuickBooks when that transaction downloads into the bank feed, that's a pretty good sign that your payment might not have been recorded into Clio or that it was recorded into the incorrect account. So that's, again, a perfect example of why it's important to be doing your reconciliations on an ongoing basis. Not only is this essential for maintaining an accurate paper trail, ultimately, creating an invoice takes a minute, and it will result in much more accurate and reliable accounting, as well as being able to collect as much as possible. Another thing that's a big source of confusion for a lot of our customers is this idea of undeposited funds. At its core, undeposited funds is money that has been recorded as received in Clio, but has not yet been deposited into the bank. There are a number of reasons this might happen. We'll talk about a couple of them. One, with credit card payments, it might happen that you charge 10 credit card payments in a day, but there's one settlement at the end of the day. So in QuickBooks, you still have to match these, the one deposit from your merchant processor with the various bills that were paid. The other example is, let's say firms bill from trust. So throughout the month or throughout the week or whatever period they do this, they'll record in Clio that they paid money from trust. They moved it into operating. As far as Clio is concerned, again, this is what you want to happen. As far as Clio is concerned, that money has been moved, the trust has been decremented, and those are the records you have. However, if you only go at the end of the month or the end of the week to deposit all of these actual funds or transfer these funds from trust into operating, then it's not reflected until it happens. And so again, Clio is what you want to happen. QuickBooks is what actually happened. Undeposited funds are where the payments that are recorded in Clio live until they are actually matched to money hitting your bank. Excuse me. To help pull this together, I want to talk about the real-world mechanics of what actually happens when a bill is paid. We've seen that it's easy to get caught up in the weeds and miss the forest for the trees, and it really doesn't have to be so complicated. For the purposes of this flowchart here, the gray is what actually happened in real life, blue is Clio, the green is QuickBooks, the dotted lines represent what happens in the background, and the solid lines are things that you have to do. So client pays a bill. And this is simple, and there might be additional use cases, but it's even simpler if it's from trust. But the client pays the bill. As the attorney or the office staff that records that, you record the payment against the bill in Clio. On the back end, Once that money is deposited into the bank, a couple days later, sometimes it's 1 day, sometimes it's 3, 4, depending if it's a holiday or a weekend, that transaction will be downloaded into QuickBooks Bank Feed. Again, this is a clearinghouse for you to be able to process the transactions, but that's where it'll live until you have a chance to take a look at it. On the other side, once that bill payment is recorded in Clio, the payment will sync from Clio into undeposited funds. Okay, so you have two things going on here. One, you have the transaction sitting in the bank feed. This was actual money received. And then you have these bill payments that are living in a separate sort of limbo, which is called undeposited funds. The way you clear both of these is that you record the deposit in the bank feed by checking off the appropriate invoice payment or payments from undeposited funds. Okay? There are a few other things to keep in mind when it comes to recording payments into Clio or into QuickBooks that depend on the payment method used. Really a couple things we're going to talk about here. Non-credit card payments. This is anything from check, cash, wire transfer, Zelle. I think probably covers it. And then credit card payments on the other side. These are really the two most common ways bills are paid. For bills that are paid with non-credit cards, the deposits download into the bank feed and are recorded into QuickBooks. And that's where you look at it, the process we did before. What's really important here is that it need to have a match, and these sort of payments require the users to manually record bill payments in Clio. So when you record it, the big takeaway on this one is to make sure that you select the appropriate deposit account. If you're moving money into trust, you need to select the appropriate trust account in Clio, and when you deposit a bill, you need to also record it into the appropriate deposit account. For credit card payments, attorneys have specific needs that only a few merchant processors are really designed to support. Law firms need a processor that's able to deposit funds into either operating or IOLTA directly, while charging the processing fees out of the other operating account. It's for this reason the merchant processors such as Square or Stripe just don't work for attorneys. I put this alert sign so that you really are mindful about using legal-specific merchant processors. For Clio users, naturally, Clio Payments, we feel, is the best option as it's very deeply integrated and makes recording payments super easy. Additionally, something that I love as an accountant is that it forces you to create a bill before you can accept payment. If you're using a different legal-specific merchant processor, such as LawPay, the process for recording payments is more similar to the non-credit card payments, where you need to create the bill and process the bill payment in Clio and then record it on the QuickBooks side. In this section, we were thinking about the best way to utilize our short time together. We wanted to talk about some of our thoughts on the way that we set up the QuickBooks Clio integration. This is something we get a lot of questions on, and there's something that there's some confusion on. Clio has great resources, but before you try to do this yourself, I really urge you to consult with a Clio certified consultant or someone that is familiar with how to do this, because there are some nuances. I'm going to share our thoughts today. This might not be the only way. It might not be the way your accountant wants to do it, and so if they know what they're doing, don't argue with them, but this is just, in our experience, the way that we recommend setting it up. The first thing is export approved bills and record payments. For reasons that we talked about, we enable this. When it comes to picking the start date, this is something that's hard for me to give a one-size-fits-all guidance on. And so we recommend that if you're just starting your firm brand new, you go out on your own, you get Clio right away, you start keeping Clio as the source of truth, then doing all bills ever created is a good practice. If you have been using some other legal practice management tool or not, or using a spreadsheet, that's where it would be really important that you select a specific date. And this is one of those things that varies case to case. And the other two items are pretty self-explanatory, so I'm not going to dive into those. And this is also on the handout as well, if this is helpful for you in the future. Map to QBO is interesting because this is the fields that map to products and services in QuickBooks. These need to be created in QuickBooks first, and then when you initiate the sync, it'll pull in the chart of accounts, and you'll be able to map these things here. I want to call out expenses. This is where your case-related expenses will map to. Again, we can talk about it later, but we suggest that you try to keep it to either advanced client costs or case-related expenses, depending on what's most advantageous for you. But ultimately, when you record to either of these categories in QuickBooks, when the transaction actually comes in, the bill payment that is processed from Clio will decrement that amount, and so it ends up being net the same. And then finally, track firm users on bills is something that does require a QuickBooks Plus or QuickBooks Advanced subscription. It's not going to work on QuickBooks Essentials. And it utilizes the classes functionality. As a note, QBO Plus and Advanced have a bit more client-centric reporting, some additional functionality. You can decide if it's the best fit for you. It's not impossible to integrate Clio and QuickBooks when you have QuickBooks Essentials. On the last slide, this is the one that's sort of the most controversial for us. We don't turn on export trust transactions and check printing. The reason for this is, as nice as it would be to have check printing turned on and to be able to print checks from QuickBooks, the bigger issue is that the way that, when this is turned on, the way that the sync pushes the transactions is as two transactions. One of those is a transfer from IOLTA to operating, which we also already said we don't like, and a journal entry decrementing client trust liabilities and incrementing income. This makes it really, really hard to troubleshoot, and you end up with two transactions for every single trust transfer or trust transaction, and ends up being very tedious. What do you do instead is even easier, or I think just as easy. Just make sure all the money in to trust account increases client trust liabilities, all the money out decrements client trust liabilities. The next thing is this import hard costs. You might have heard me say that we don't turn it on. Sort of true. We do turn it on, but not for the functionality that it sort of says in the blurb here. We turn it on because, based on the way the sync is set up, when import hard costs is turned on, the Clio client imports on an ongoing basis, whereas when it's off, it only imports once the first bill is created. And so we like having the clients in there, and so this is a way to push that. You'll notice at the bottom in this account section that we have sort of a placeholder account that we set up. The reality is that Clio needs you to map it to something, but if it doesn't have any transactions, it won't show up on your financial reports anyway. To wrap things up, I want to talk about a few greatest hits of things to avoid. And I want to really point out, these things are straightforward, but they're really, really easy to avoid and will make a lot less headache for you in the future. Avoid recording transactions in Clio into incorrect deposit accounts. Avoid having multiple trust accounts if possible. We recognize that this isn't always an option. If you operate in multiple states, you might need to have multiple trust accounts. However, it becomes even more essential that you select the appropriate deposit accounts when those payments are received and processed, because it becomes exponentially harder to troubleshoot when you're trying to search through these various accounts. Avoid using non-legal focused merchant processors, and avoid running non-trust expenses through your trust account. Again, these things happen, and when they do, you should have Clio reflect what actually happened in the bank, but you should try to avoid it if you can. And then finally, I want to recap some best practices. The number one takeaway, the number one thing, if you leave with one thing, record activities and expenses in Clio as they happen. It takes a moment on the front end. It's an investment, I promise you. Not only will you get more money back, you'll have way less headache in the future. In QuickBooks, only match operating accounts deposits with invoice payments, which are the ones held in undeposited funds, and never with the invoices that are created. Occasionally, QuickBooks will try to match to an invoice. If you do this, you may end up with duplicate revenue being recorded, and so it's important to avoid. Always record IOLTA deposits and withdrawals as client trust liabilities, with the exception of that trust interest. And always do your business and three-way reconciliations monthly to identify and resolve issues as they arise. I hope that there was a little bit of insight here for you, and that you will be able to think more critically about your accounting and ask smart questions of the person that's helping you do it. And I really appreciate all of you joining. My team and I will be in the lounge back there, and otherwise, those of you joining us virtually, feel free to reach out via email or our website, and we'd love to connect. Thank you all so much. Enjoy the rest of your conference.